Hi everyone, my name is Andrew Bloom and I'm Vice President of Fast Business Capital. And welcome everybody to our introductory webinar on our term loans. It's one of the most popular and effective products in addressing what is often a number one challenge for any small business owner, which is the ability to get an affordable, make sense business loan. Because of the bank's general unwillingness to loan to small businesses, it has been estimated that there is a $250 billion shortfall every year for small businesses. That's why this alternative to bank financing has become so popular. Today we're going to discuss term loans. Businesses unable to get bank financing have turned to merchant cash advance or daily debit type loans. I'm going to show you why that is the exact wrong thing to do. The monthly repayment on those type of loans are 80 to 85% more expensive than our term loans. In other words, one of the reasons why businesses are looking for financing in the first place is because they don't have adequate cash flow to fuel growth. That's why we're offering our term loans. We think it makes far more sense for businesses to be able to access capital without having a major impact on your monthly cash flow. In short, we provide make-sense business loans that the other guys just can't compete with. Now, if your business has cash flow issues due to invoicing your customers who take 30, 60, 90 days to pay, then we can also offer an asset-based line of credit or an inventory-based line of credit as a better solution. So make sure to give us a call to see how we can put together a financing package specifically designed to make sense for your business. Now, there's a reason why banks generally don't lend to small businesses. Banks are all about deposits. The more deposits they have, the more they can loan and make a profit. However, what they're comfortable investing in are very conservative investments. These conservative investments, they only yield 1 to 4% profit margin, but they don't pay depositors much, if anything at all, so the profit margin is still pretty good. Now, banks do lend to businesses, but these businesses have to be rock solid and present little risk. Now, here's an example of a bank loan compared to our term loan. As you can see, the requirements and guidelines for an approval are very different. Bank loans, well, they want strong credit, which means 700 plus credit scores, a minimum of 5 years in business, 50% reserves and hard assets versus the loan. And because banks don't specialize in small loans, they typically can't make money for loans less than $1 million. In addition, the average approval can take from 60 to 90 days or more, and most likely will not be the loan amount you were looking for. The primary reason small businesses can't qualify for a bank loan is the lack of assets to pledge as collateral. Now, our term loan product, as you can see in the example, is a lot easier to qualify for and very beneficial for the merchant. The guidelines are not as stringent as a bank loan. You don't need a high credit score and only 1 year in business. We can make a decision within 24 hours with not much documentation, and no assets are needed to get approved. Our focus is on the overall health of a company and not necessarily the worth of or overall value of a company. Some of the benefits for the small business is that they will receive one lump sum, they have access to capital quickly, and more capital in the future with small monthly payments. And they generally are over a 1 to 5 year term. It's usually your choice. Another positive about the term loan is that they have no prepayment penalty. This means you can take the loan out over an extended period to keep the monthly payments low in order to minimize impact on cash flow, but it also means that if business is good, you can always pay the loan off much earlier and save yourself thousands of dollars. Plus, of course, the loan is 100% tax deductible, which serves to minimize the true cost of the loan. Many of our customers have either looked into or have acquired an MCA or ACH loan type product. Now, how you can recognize these is that, for example, most of you have probably received a mail piece in the form of a check or a credit card offering, easy approval and quick capital. For a long time, this was the only alternative financing available. Merchant cash advance loans, or MCA, or daily debit type loans, commonly referred to as ACH loans, are very expensive with regard to the rate and fees charged. Although businesses are able to get capital quickly with very minimal documentation, the combination of sky-high rates, short terms, and the required daily loan repayment can be a real challenge for businesses to continue operating their business profitably. Plus, it also is a major inhibitor to growth. So thankfully, we are one of just a few companies out there offering term loans that are much more advantageous to small business owners. Now let's talk about APR and why MCA/ACH type companies say they don't have one. The reason why they say that is because the true cost of the loan is astronomical. As you'll see from the chart on the next slide, the APRs are through the roof. You might have heard these companies say they don't have an interest rate. It's a flat rate or a buy rate or factor rate, or even it's a flat payback percentage. Well, that's just not the case. You don't have to take our word for it. You can go on to any website that has an APR calculator and do it yourself. All you do is plug in the loan amount, the payment, and the term, and it'll tell you what the APR is. Now, the buy rates typically range from 1.2 to 1.5, but when you add in the costs and factor in the shorter term, you're paying more like 97% APR. If you've been offered or currently have an MCA or ACH loan, you may want to pause this presentation and take a closer look at this chart. The average buy rate is right around 1.3. The average term businesses take these loans for is 6 to 12 months. So, if you're offered a 1.3 buy rate for 6 months, the APR would equal 97%. Now, would anyone ever take a business loan out if they told you that was the equivalent APR? I don't think so. So be very careful before you accept one of these kinds of loans. If you currently have one of these loans, we think it'll be in your best interest to give us a call to see if we can pay it off with a term loan that offers much lower monthly payments. Here you can see a side-by-side comparison. I need to make sure and clarify one point, though. The interest rates on our term loans start from 5.49%. The actual rate you qualify for depends upon the overall health and strength of your business. However, for the purpose of this illustration, we'll choose the average rate of 10% to make the comparison. Now, as you can see, the APR of an MCA/ACH loan is at 81.97%. Whereas the APR based on an interest rate of 10% is only 12.17%. More importantly, the monthly payment for the term loan is over $6,000 less. Do you think that'll help your cash flow? Compare that to the daily payment required for an MCA/ACH loan. Would you want your bank account debited every single business day for that amount? Notwithstanding the amount of payment, just updating your accounting software every day is a gigantic hassle. You should also notice that the total payback is almost $5,000 less with our term loan. And because our term loan is a fully amortizing loan, you can always pay it off early without a prepayment penalty. And this means you can potentially save thousands of dollars more. You can't do that with an MCA/ACH loan. You'll repay the entire amount. Period. That's all I have for today. I think it's become pretty clear that this really is the most beneficial product there is for if your business needs a lump sum of capital. If you currently have one of those daily debit loans, you should really give us a call to see how much we can save you. Otherwise, if you have any questions at all, please send me an email or give me a call, and I'd be happy to walk you through any questions that you may have on this product or on any of our other products. Thanks for taking the time to listen.